In the last video, I showed how to execute a trade. Now let's talk trade management and the position detail page. In this example, we'll look at an iron Condor, traded as a Zero DTE, meaning expiring today. This is a pure example of a potential income trade, selling at the expected move for the day, ideally with the market staying within my trade. If the market makes a bigger than expected move, my risk is defined. You'll notice the expected move lines again on this chart. This is a great gut level visual feedback for me, as I can see if the market makes a move higher or lower into the close, where it would hit my profit or loss zones. Obviously, the expected move is in no way guaranteed, but it's a good feedback for my bearings. And that's because my risk reward changes as time passes. Not my initial risk reward, that is defined and stays the same, but my remaining risk reward. This trade is profitable right now, but there's still time for things to get better or worse. Therefore, I'm comparing my current profit and trade value to what I'm risking to make more, or even retain the profits that I currently have mark to market. One of the biggest mysteries for many traders is when to exit a trade or whether to keep the position on for longer. This simple visualization allows for a straightforward gut level check. If this trade was a mark-to-market loser at this moment, my judgment is similar. Looking at how much I've lost on paper, how much worse it could get, and is the option market giving me any realistic chance of making money back? If the answer to that question is no, I may cut my losses in that situation and move on. And there's intuitive math behind it to help further. Under the metrics tab is even more detailed information, including updated probabilities and what the trade would be worth if the stock expired at the same level. This gives a sense of how much premium will either be lost or gained if all things remained equal. With a credit spread, my max gain is if the trade is worthless. So I want this to go to zero. But the less left in the trade, the more of my profits I'm risking if things suddenly go wrong. If I determine it's the right time for an exit, hitting that button will take me to a closing ticket, again filled out and starting at the mid. I can review the closing price I'm willing to spend to take this credit spread off at a profit.